We're on the cusp of another earnings season, as critical as all the past ones. Lots of hope stacked onto this one. IndusInd Bank, TCS and Infosys, as always, will kick off the results this week. But before we get caught up in the frenzy of all those individual numbers, Darshan Mehta standing by with the key trends that define the third quarter and what analysts are pricing in terms of different sectors and companies. Darshan, can we expect, let me ask you the many $1 trillion question, a meaningful earnings recovery this time?
Yeah, I think if you see the trend, I think it's moving towards an inline set of numbers. Right now, I think post demonetization, it will have a low base, so the growth will be much higher, and GST is fully set in, so that will be interesting to watch. But three big Nifty companies will come out. IndusInd will be tomorrow during market hours, TCS after market hours tomorrow, and Infosys also after market hours on Friday. So these are the three key numbers that you have to watch out today. A lot of mid caps will also come out with numbers, with the likes of Shree Cement, Syntex Industries, Syntex Plastics. So it'll be earnings heavy next few days for us. Now, in terms of, this is the trend that we've seen from the fourth quarter. What we saw is that the number of strong numbers have come down from 23 to 13 to 16. But the key trend is that the number of inline set of numbers that have been managing to meet estimates, that has gone up significantly from 15 to 18 to almost 24 in the last quarter. So last quarter was a quarter in which maximum were in line. So it'll be interesting to see what happens this time around. Now, what are the key trends that you need to watch out? And first of all, this is the estimates. We took some of them, the earlier ones that came out in terms of revenue and PAT growth. So Edelweiss, Kotak and Motilal Oswal, 16 to 20% is the range that they are talking about on the Nifty 50 companies, and on a PAT basis anywhere between 12 to 18%. So they definitely expect growth to come in this time around over the last year. Now, some of the key trends that you need to watch out as far as the earnings season is concerned. First of all, consumer-facing and auto companies will see a lot of volume growth and margin improvement. You've seen the auto sales numbers that have come out, so that will be strong. Retail, media, consumption, all of them will come on a base of demonetization. So the growth will be definitely there. And PSU banks will be watch out because they will be hit because of lower treasury income because of rising bond yields. So that will be something that you will be watching out as far as the key trends on a broader space is concerned. Pharma, the pressure will continue. Pricing pressure over the past few quarters, they have been actually coming out with poor set of numbers. Upstream companies, because of higher crude prices, will see a significant amount of traction that will come in on the top line. Downstream will have to be watched out because of the same reason, rising crude price. And technology again may see a lackluster quarters. Again, the broad expectation is that the mid caps will outperform the large caps this time around. So these are the key trends that you're watching out in the third quarter. Now, individually, if you're looking at some of the trends in terms of auto, market share gains are expected in Maruti. The auto sales numbers are already out, so Maruti is expected to have a decent quarter. Tata Motors, a lot of brokerages spoke about Tata Motors being the dark horse. Improved Jaguar performance, product mix changes, so that is something they'll watch out for. Ashok Leyland and the commercial vehicles will be interesting to watch because of the BS4 emission norms. Bajaj Auto, improved product mix will be something to watch out for. And Eicher, not too many are very positive on Eicher this time around because of stagnant volumes that are there this time around. The other key sectors that you have to watch out for, PSU banks may continue to lag private sector banks, and lower yield treasury gains on the back of bond yields is something that you need to watch out for. Asset quality definitely will be watched out for these three banks, Axis Bank, Yes Bank and ICICI Bank, extremely important. And the momentum on NBFCs will continue to grow, but on overall sense, private sector banks are expected to do better than the public sector banks. East India exposure will aid ACC and Shree Cement this time around, while shortage of sand will hit South Indian companies like India Cements and Ramco Cements. The other key sectors that you have to watch out, FMCG. Significant amount of traction. ITC will be subdued because of the GST margin expansion on HUL. GM Breweries came out with a strong set of numbers. So alcohol companies will be the key watched out trend this time around. But remember, all of them come out from a low base of demonetization last time around. Infosys and TCS will grow almost 1 to 1.5% in constant currency. The mid-cap companies and the next rung will actually grow much higher. HCL Tech, Mindtree, Tech Mahindra, and the smaller rung will even grow faster than this, is what the brokerage estimates are there. Pharma, Sun, Cipla, Cadila will report strong set of numbers. They're coming out of a low base and pricing issues to impact Lupin and Dr. Reddy's this time around. The other sectors that we want to focus on, telecom, results will be expected to be impacted significantly by the IUC cuts, and Jio Financials will be the most watched in terms of how the trend moves out and in the telecom space. The other is the oil and gas space, upstream and downstream. Upstream will be benefited from crude prices. Reliance will be keenly watched out for because of the ramp up in new capacity that they have done. The other sector we want to talk about is metals. Most interesting, ferrous companies will likely gain from the price hike, and non-ferrous play will gain on the firm LME prices. So metals as a sector is expected to significantly outperform this time around. So that's the broad sense that we're getting in from the earnings season this time around.